Hi everybody, welcome to the Emerging You channel. I am Angelica. I am an enrolled agent. But before we get started, let's go ahead and put the disclaimer up there. Today, we are going to talk about whether or not you're prepared for the IRS questions if you were ever to get audited regarding your deductions. So let's talk about how to protect your IRS deductions going forward. Are you audit proof? Making sure that your tax deductions will stand with the IRS is a big deal. When I say that your deductions regarding your business needs to be ordinary, necessary, and reasonable to your industry. The IRS can question your deductions years later. So you still need to make sure that you are on top of your game, even though you filed your return. And you want to keep those records for at least 3 years. The IRS can audit you up to 3 years after you filed your return, and sometimes even longer, depending on what they found on your return. Self-employed individuals and small businesses are high risk. They look at these as a high risk return because of the Schedule C. A lot of people use the Schedule C to file their taxes. So it is much easier to try to get away with fraud, overstating your income, your deductions, and whatnot. So when you over-report your deductions, it can trigger a red flag. What do I mean by this? If you filed a previous return and your deductions are overstated, meaning you have a high jump in your deductions, it's going to be a red flag. So if the IRS sees that you spend $5,000 on office supplies, but the following year you spending $20,000, $30,000 on office supplies, that's a red flag. They're going to want to know, what did you buy that made this deduction jump? And what is it for? Do you have proof? Are you sure it's business and not personal? These are some of the questions they're going to ask. Common deduction mistakes that triggers an audit. Overstating business expenses, like we just talked about. Mixing your personal and business finances. Any auditor will tell you, if you mix your business and your personal expenses together in the same bank account, they can automatically disqualify that deduction. Yes, they can automatically disqualify the deduction if they want to, because you can't really prove that it's for business. You're mixing those two finances together. Definitely a red flag. No receipts or proof of expenses. Huge one. No receipts mean it did not happen. No statement, no proof, no nothing. It did not happen. Best way is to track your deductions. Claiming 100% of business use of a vehicle. Definitely a red flag. You're not doing business 100% of the time. At some point, you got to run personal errands. You need to go pay a bill. You got to go to the store. You got to go here. You got to go there. Those are personal miles. So what personal vehicle are you using? They want to know this. When you are claiming your vehicle on your tax return, it asks you specifically, do you have another business for personal? Are you using this vehicle for 100% business? That is a red flag. There's no way you're using it all for business. No way. You got to go get maintenance. You got to go register your car. You're doing little stuff here and there. It may not be a lot, but the IRS knows there's no way you're using one vehicle. You only have one vehicle and you're using it for business. Use common sense, you guys. There's no way that you're using one vehicle for business all the time. Home office deduction errors. You need to know when you can claim your home office and what you can claim with it. So when you do claim at home office, you want to be careful because you need to claim a space that is designated to your office. And I'm not talking about the kitchen table, the dining room table, your living room. I'm not talking about that. I'm talking about a space that is only for your business with everything that's in it, like your computer, your supplies, or whatever. All of this is for business. There's nothing that you're using for personal use, okay? When you do this, you want to make sure you have your measurements. Even a photo will work with your measurements on the back of it, showing them, hey, I use this for business. This is my office. It is designated to only be my office. I'm not letting my kids come in here and play. I'm not letting them get on the laptop. This is specifically for my business. Okay. Keep that in mind when you are claiming your home office deductions. How to protect your deductions from the IRS. Keep detailed records, such as your receipts, your invoice, your bank statements. I use an app. There are plenty of apps out there that you can use to track your expenses. The apps that I use, it allows me to take a picture of the receipt, store the receipt, put the note on the receipt, whatever it's for, whatever notes I got to put on there, save it. That way, when I go and file my taxes for the following year, I can easily log in to the website and export my profit and loss statement. Then I also have access to all of the receipts that's stored in the database. It can also track your mileage, which is a big plus. So that leads to using an accounting software, such as QuickBooks or Wave. QuickBooks is a good one. It allows you to track all of your expenses and your income. Keep that in mind. And you can store your receipts, statements, all that good stuff in there. And you can have, it also exports all your reports. So when you file your taxes at the end of the year, it makes it 10 times easier. Trust me, it's an investment. It's a deduction for your business. Take advantage of it while you can. Maintain separate business and personal accounts. We already talked about this one, but let me say it again. Do not mix your personal and business accounts. All of your business income and expenses should be coming out of your business account and only your business account. Work with a tax professional. If you don't do taxes, I don't expect you to know much about it. Okay? Get with somebody who has been studying it and has experience with your business formation. Don't just let anybody do your taxes. And I'll be the one to say this. When you are bouncing around from a taxpayer every single year, you're going to somebody different, you are liable to have mistakes. Find somebody good and stick with them. Find somebody who's going to answer all of your questions, explain stuff, even meet with you once or twice a year if you need to. They should be available all year round. Don't just go to somebody who is available until April, the end of tax season, and then they disappear. Don't do that, because if you get audited, that audit letter is going to come during the off season, and they're going to want you to fix that. So get with a tax professional that fits your needs and that's available to answer any of your questions. Last but not least, be honest. Stop trying to fudge the numbers. You are only hurting yourself. Don't claim anything that you cannot prove. And make sure you are only claiming expenses as ordinary, reasonable, and necessary. If you do anything more than that, it's going to come back around to you. So just be honest when you file your returns. I do offer a free consultation for those who want it, who are going to take advantage of the time to kind of get some tips or opinions on whatever your tax situation may be. All you have to do is go to the link below and book your session with me. I also have a lot of freebies available to you guys to put you in the best situation possible. Take advantage of the freebies while they are there. Everything is in my description. And don't forget, comment on the video. Let me know what you guys think about the video. If there is anything you want me to talk about, drop it below. Like the video for the algorithm and share with somebody else who needs to hear this. Share, 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 and subscribe for all of the financial and tax tips. Until then, I'll see you guys next time.